let you take it away and tell us what Keep Your Tax is all about.
Absolutely, yeah. Hey everyone, thanks for leaving comments in the chat. We'll monitor those as we keep going here. So I'm going to present. What I'm going to talk about today is an overview of what it means to be an independent contractor when it comes to taxes. Some of you are going to be familiar with this stuff, but I'm going to try to keep it interesting, even if you're a veteran and you've been doing independent contracting for years now. But before I dive in, I want to give a little bit of context about myself. So I am one of the founders of Keep Your Tax. I've been in the tax industry for a better part of a decade, helping folks specifically in this space, gig and contractors and freelancers with taxes. So I've worked with over my last company had over 500,000 Uber drivers using that. Keep Your Tax has we filed over 50,000 tax returns from contractors. So we've seen a lot. We've heard it all to some extent, and hopefully today I can share some of that insight. And I hope that it's useful. Okay, so in terms of the agenda, I'm going to start with just basics, just the things that, the terms you're going to hear as an independent contractor, roughly what they mean, just a quick summary. Then we're going to dive into the top 5 mistakes that me and my team see contractors make and how to avoid them. This is going to be fun. You're probably going to, maybe 3 of them, you're like, oh, I knew that, but maybe 2 of them you didn't. So that should be a good time. And then at the end, I'll leave some time for questions. Trad might chime in as well and curate those. Great. And then just mandatory disclosure here, I myself am actually not a tax professional. We employ CPAs on our team, but regardless, taxes are one of those areas where it's very complicated. It depends on various, demographic information, and there's too much basically to cover in one session. So what we're going to do today are generalizations to some extent. So keep that in mind. Ultimately, if you have some very complex tax situations, it's best to seek the advice of a tax professional. All right, so with that out of the way, let's start with the basics. So if you work as a Wonoloer, then you are a 1099 contractor. And what that means is that unlike a sort of a traditional salaried or a W-2 job, you have more flexibility to set your own hours, to work many different kinds of jobs, but it also means that you're being paid essentially as a business owner. So all these bullets are different terms and different examples of independent contracting that are essentially interchangeable. So you are, as an independent contractor, you are treated in the same bucket as freelancers, self-employed entrepreneurs, business owners. You're effectively the same thing. And so when it comes to taxes, that means there's a little bit of complexity there that isn't there for sort of salaried employees. So there's a bunch of terms that you're going to see thrown around that I want to cover. So the first here is these tax forms called the 1099. So there's a bunch of different kinds. There's the 1099K, the 1099 MISC. Basically, what these are just forms that report your income. So when you work for a platform like Wonolo, or rather when you work for the companies that Wonolo matches you with, those employers will give you a 1099 of some kind at the end of the year, which is essentially a form that says, here's how much we paid you. Now, the thing to remember with this, a couple things. So first is that not all independent contracting work is going to get you a 1099 form. So, there are certain limits. Some platforms won't issue one unless you earn over $30,000 with them. There's different kind of characteristics. So even if you did not receive a 1099 form, you are still obligated to report that on your taxes. especially if it's over $600, which is kind of the IRS threshold. The second thing to know about these forms is if you did receive one, you certainly do not want to skip putting that on your taxes, because if you received one, that means that the platform you worked with also sent one of those forms to the IRS. So the IRS already knows that you got paid as a contractor. So, so the numbers that are matched, basically. Cool. Second term here is a Schedule C. I'm not going to go too, we don't need to go too deep into these, but a Schedule C is basically another form that is going to go on your taxes, which reports all of your business expenses. These are also called tax deductions. They're also called tax write-offs, and they're really important for reducing your tax bill and paying the minimum. And we'll cover that in more detail later. So speaking of Schedule C, tax deductible expenses are things you buy during the year that help you do your job as a 1099 contractor. And these are really important because basically you'll save a bunch of money on taxes, and we'll dive more into this later. Fourth thing here is tax withholding. So again, as a 1099 contractor, one of the major differences between a sort of part-time W-2 type work is that taxes are not being withheld from your pay stubs. And so at the end of the year, you're going to actually owe that money that you would have, that a sort of W-2 job you would have been paying throughout the year. And then last term here, again, we're going to cover this a little bit more later, but the term quarterly taxes, which are also called estimated tax payments, are basically they're a payment that you need to make to the IRS 4 times a year to essentially simulate the experience of withholding taxes from your pay stubs. So rather than paying once at the end of the year, as a 1099 contractor, you're expected to pay throughout the year, so that come tax time, you don't just have to, you don't make one big bulk payment. You've already been making those payments throughout the year. So we'll talk about that one more as well. But so these are the basics. These are terms, and feel free to ask follow-up questions. We can dive in more there. But let's do the fun stuff. So these are the top 5 mistakes that we see independent contractors make when it comes to taxes, especially folks who are doing it for the first time. These are myths or misconceptions, gotchas. And the first one is the assumption that you're going to get a tax refund. So this goes back to the point that as a 1099 contractor, taxes are not being withheld every pay stub. And so when it comes to the end of the year, if you were not paying quarterly taxes or estimated taxes, then you will owe money to the government. And that money is, it's somewhere between 15 and 35%, depending on which state you live in and how much money you made of your reported contracting income. Now, if you also have a W-2 income stream as well as 1099, then those two can balance each other out. But the way to think about it is if you made, I don't know, $10,000 in last year from 1099 income, then you're going to owe somewhere between $1,500 and $3,000 in taxes. So don't let that catch you by surprise. So I just want to mention we have this free tool. If you go to keepertax.com, you can estimate how much you're going to owe by going over there, and we have a free tax calculator there. Cool. Mistake number 2 to avoid is to not claim tax write-offs. So we hear this all the time. Folks think that folks get confused with the standard deduction, for example, where everyone gets a $12,000 to $24,000 standard deduction, and folks assume that if you made less than a certain amount as a 1099 contractor, then it doesn't matter. Then claiming tax write-offs doesn't matter. This is just not true. Basically, if you earned any amount of money from 1099 contracting, then tax write-offs are going to save you money. So if you it doesn't matter if you also had W-2 income. It doesn't matter if you only made $600 from 1099 contracting. it's every dollar of tax deduction is going to save you money. The other thing we hear is, folks tell us they don't have any write-offs. Like maybe they're driving or they work primarily from home. But this is generally not true. This is what Keeper Tax is sort of designed to help you with. But folks, there are tax deductions everywhere. If you work on a laptop, that purchase of that laptop is a write-off. The Wi-Fi you use to access the internet while working, that's a partial write-off as well. Your phone bill is partial write-off, right? The gas for your car, maintenance, there are tax deductions everywhere, and it's really important to take the time to find them because it's a lot of money, and a lot of folks, because taxes are so complicated, a lot of folks miss out here. So again, we have a free tool for you if you want to check out what you can input the type of work you do, and then you can see a list of all the different types of expenses that you can write off on your taxes. So you can visit that at keepertax.com. Number 3, there is a common misconception to believe that if you forgot to keep a paper receipt for something, you can't claim it as a tax write-off. So folks, if you were working last year but you weren't very organized, it turns out like credit card statements and bank statements constitute sufficient proof for the vast majority of expenses. So even email receipts or other digital records can all replace the need for a physical paper receipt. The only exception here is cash payments, especially cash payments over $75. So if you're claiming a very expensive meal and entertainment expense, that's where sort of the IRS will start to ask questions. But for the vast majority of expenses, especially those below $75, if you have it on a credit card statement, you should claim it. Number 4, skipping quarterly tax payments. So we talked a little bit about quarterly tax payments at the beginning. Basically, this is a very annoying thing that folks with freelancing income have to do. So you have to make a payment both to the IRS and to your state government, on July 15th this year, on September 15th, on January 15th, and then on April 15th. You'll have to make basically a quarter of the taxes that you will owe at the end of the year. You will need to pay at each of those times. The way to decide if you should actually be doing this is essentially if you think you're going to owe more than $1,000 in taxes, then you need to be doing these. So if you have W-2 income as your primary source of income and you earned a little bit of money on the side with independent contracting, then maybe you don't need to do this. But if most of your income is coming from 1099, then you absolutely should. And then it's not on the slide, but we do have a free calculator as well on our site to help with this. And the last thing here is filing late. So folks, if you're in a situation where money's tight and you can't pay your tax bill, it's really important not to skip it. So you should still file taxes. You should just work with the IRS to say, I can't pay taxes. I can't pay my tax bill right now, but you should still file. And the reason that's really important is because there's a big distinction between the penalty the IRS charges if you did not file at all versus the penalty they charge if you filed but didn't pay. It's about 10 times more, basically, the penalty if you don't file at all. So what you should do is you should file, and you should essentially, tell the IRS you can't pay them right now, and they'll reach out with great payment plans that are actually better than any kind of commercial loan that you can get. They have incredibly low interest rates. It's really the best option out there. Great. So that's the basics. Those are the 5 top misconceptions. Trad, were there any questions from the group?
Yes, we had a few pre-submitted questions, and it looks like we have one in the chat. So let's get to that one first. Is it free to use Keeper Tax services?
Yeah, so good question. So we've partnered with Wonolo to make it really easy to basically do your taxes. So we do have a free component to that. So you can, if you use Wonolo to sign up for Keeper Tax, you can get a free scan of your last year's expenses to find tax deductible expenses. And then we will give you a spreadsheet for free that you can use to, plug it into a different tax filing service or give to an accountant. So that's really valuable. We can help you find, thousands of dollars in extra savings. We don't charge you anything for that. If you do choose to use us for tax filing, there is a fee. Wonoloers get a $30 discount. Normally it's $89. With Wonolo, it'll be $59. That includes federal and state.
Amazing. It's a great deal.
Yeah.
Where would a Wonoloer go to redeem that discount?
Yeah. So I believe there's a link right inside of your program. Maybe you can. I actually am not quite familiar with where to go for that program.
Yeah, I'll ask and I'll answer it. If a Wonoloer goes on their Wonolo app on the sidebar to the Wonoloer hub, there you can access all of the portable benefits, perks, and discounts that you as a Wonoloer have access to. There's no, at this moment, there's no job requirements to access Keeper Tax. You can click the link to get started. It's very simple. How about this question? I just started working Wonolo jobs. How should I prepare for taxes next year?
Yeah, great question. So basically the way to prevent a big time crunch and a big sort of stress next year is to try to track expenses during the year. So the really tricky stuff that you're going to want to track are things that are not regular. So you can always go back and, if you work from a home office, you can write off part of your rent, you can do insurance. Things that are recurring are easier. But things that are one time, like if you bought supplies, if you had to buy a new, phone case or something during the year that's not a regular purchase, write that down. Write it down, put it in a spreadsheet, something, at least keep the receipt. Because that stuff is going to be easy, hard to remember. And then if you do keep it, it's to give you a sense, it's like a 30% discount essentially. So you can, if you spent $10 on a new iPhone charger, you're going to get $3 about back at the end of the year on your taxes. So it's not nothing. Yeah. I saw one more here, Tread. Can car payments be deducted insurance if you use your car? Yeah. So Andrea, yes, car payments are absolutely deductible. And the key here is you want to claim those because those are expensive and it'll save you a lot of money. You're going to want to do that instead of mileage, most likely, because, if there's two ways to claim car expenses. And if you have a lease or a car loan, then it's probably going to be better to claim that instead of mileage. So.
There we go. Awesome. Well, Paul,
Great.
Thank you so much for joining today.
Absolutely.
And thank you for Keeper Tax for providing this amazing service. I know that a lot of people will benefit and save money with it.
So.
Any last words from you, Paul?
No, we love working with Wonoloers. Normally the thing we're giving you guys for free is $40. So I hope you take advantage of it. It's a great deal.
Awesome. So that is our time for today. Thank you so much for tuning in. Be on the lookout for more Wonolo info sessions like this in the future. So from all of us at Wonolo and at Keeper Tax, thank you so much for all of your hard work right now. We appreciate all that you're doing, and we hope that you're staying safe. All the best.
Thanks, everyone.